What's up, traders? Anthony Crudele here, and welcome to the Futures Radio Show podcast. Today, we will unveil the comprehensive steps and invaluable tips that pave the way for traders to get funded. You will learn how to harness your potential, overcome challenges, and hopefully reach new heights in your own trading adventure. From developing a solid foundation of trading knowledge to mastering effective strategies will help you navigate the complex world of trading. Now, many of you sent us questions over Twitter and email, and we will be answering those questions in today's show. Stick with us all the way to the end as we will be announcing 5 lucky winners of the Earn to Trades TCP50 trading assessments. And we'll also unravel upcoming features at Earn to Trade and give you an insider's look at their trading platforms and operational transparency. Today's podcast is sponsored by EdgeClear. Futures Radio Show listeners can now trade at EdgeClear for a low introductory rate of 59 cents for most futures products and 20 cents for micro products and even event contracts. Fund with as little as $100 and pair this with Sierra Chart's Teton order routing to receive one of the lowest all-in fees in the industry. Now, this is for new EdgeClear members only. Check this out at edgeclear.com/deli. That's edgeclear.com/deli. Now, joining me for today's discussion is Earn to Trade's head trader, Chris Gray. And Chris is really a trooper for being here today. He's a little bit underwater. He's got a lot going on, and we really appreciate him joining us today on the show again for a repeat that we had just maybe about 2 months ago, which was such a massive hit. We're going to talk about that a little bit as well. But before I get Chris in here, I want to remind all of you that the Futures Radio Show podcast, they're recorded, they're posted on iTunes, Spotify, and everywhere where you listen to your podcasts. So throughout today's live discussion, a big focus, a majority of the focus is going to be answering those questions that you guys send into us on Twitter and also emailed me. And I want subscribers to the channel to also have an opportunity to ask questions. So throughout the chat, if you want to ask us questions, put them in the chat, but you have to be a subscriber. So please take a quick moment, subscribe to the show if you're not a subscriber, and also hit that like button as I look forward to chatting with all of you throughout today's discussion. Now, we've got my friend Chris here. Chris, welcome back to the show. What's up, buddy?
How's it going, man? Hi from the hi everybody from the submarine. That is my domicile.
So, Chris, I got to tell you, first off, thanks so much for coming back on the show. We had such a massive response with the Earn to Trade giveaway last time. Good on you guys for doing this because we have now reached almost 4,000 people that have entered in this potential giveaway or in this giveaway. 4,000 people. And good on you guys. It shows your popularity. It shows how the people out there want to be able to go through Earn to Trade. I think we start off with today, just you explaining a little bit about what Earn to Trade does. And I think what differentiates you guys from other funding companies.
It's a great way to headway into it, and yeah, I'm ecstatic for the enthusiasm. So in short, we are an evaluation agency. We are the type of people that you come to if you think you have what it takes to become a trader and you're looking to minimize your personal capital risk and become a professional trader by way of trading with someone else's money. You know, when you make money, the money is yours. When you lose money, the money's someone else's. It sounds like a pipe dream, but it's not. We can explain exactly how and why it's a win-win for both parties. But in short, it's our job at Earn to Trade to make sure that you have what it takes to be a consistently profitable trader, which a lot of traders are on the path of trying to figure out that answer themselves, and it gives them a little bit more of bit of a bit of a third party opinion on the matter, I suppose, whether they want to continue their life as a trader and leapfrog forward, or maybe they're trying to decide if it's not right for them or what have you. And we kind of bridge the gap with getting traders that are good enough, the funding capital, and connecting them with a proprietary trading firm to actually trade with someone else's money while still profiting on it. But at the same time, we're providing a lot of education. So it's not just connecting the dots for capital and making sure someone's good enough. It's also trying to make sure that they have the highest chance possible to be good enough. But that's us in short. Hopefully I didn't miss anything there.
No, I thought that was perfect. A couple things I want to go over before we get to the questions. Remember, everybody, if you're in the chat, put your questions in there. We look forward to hearing from you today. Chris, you said that this is really good for both parties if people win. A lot of people have this conception that a lot of the funding people out there are just trying to put out this difficult challenge and not really funding people. I know from talking with EdgeClear, you guys are funding people. A lot of people are getting funded through Earn to Trade, I should say. And you say it's beneficial for both parties. Explain that.
Well, it's beneficial. I like to call it mutually symbiotic. So we have on the trader end of the spectrum, the reason it's beneficial for them is quite simply because they're trading with someone else's money. They're massively reduced. I mean, they're quite literally reducing their monetary risk in that sense, without getting too deep into it, to virtually zero, because when they lose, they only stand to lose someone else's money. But it's a beneficial relationship for the proprietary trading firm as well, because the proprietary trading firm, what incentivizes them is they're going to be taking 20% of the continued profits that the trader is making, and which means there go the traders making 80% of the money that they're generating from their trading account that has been filled with money that's not their own. And the nice thing about that is most of us in the trading world, when we first get started, most of us, as we get going, as we're building our, our seafaring legs, we don't have the amount of capital that would increase our chances of actually surviving and thriving as a trader. I think most people at this point understand that trading is a zero sum game, and the your most important asset you have it as a trader, outside of your wit and your intellect and your skill, is your money. It's your tool. It's how you make more money. So coming to someone like us that have the ability to connect you with a much larger amount of capital than you might have at your expenditure to trade on your own, can end up very easily exceeding, even if you're only receiving 80% of the amount of profit that you're generating. Even you're only receiving that 80%, that 80% in almost all cases with a lot of the traders that come to us is far more than 100% of the profit they'd be receiving had they been trading, I don't know, just one or two contracts, which is all that they probably had the capital to handle at their expenditure before coming to us. So in that way, it's mutually symbiotic. It's a win. It's an advantageous relationship for both the prop firm, because of course where we come in is making sure that the traders are good enough to receive the capital. And no, it's not impossible, but yes, you do need to be proficient. But if we've done our job correctly, then the prop firm should be more than happy to collect that 20%, hopefully sailing off into the sunset for the rest of time. And that trader, in theory, especially if they're doing something like our TCP, where their account size continues to grow, and I'm sure we'll touch on that stuff shortly, it just continues to be a mutually advantageous relationship where that account continues to empower the trader in ways that they weren't previously empowered.
Few points I want to touch on. First off, I love how you talked about the 80-20. And let's face it, would you rather have 80% of a bigger pile of money that you're able to trade, or 100% of a smaller pile? So mathematically, for those that don't have the financial resources to get a bigger account, this makes perfect sense for you. Also want to touch on a few things that you talked about is really, if you guys did your job, the trader is actually earning the right to trade. That's why I love the name of your company as well, because you're earning that right. A lot of people will come in with a lot of money, and even if they have a lot of money, there's that funny joke is, if whether you have $1,000 to start with or $1 million, you're still going to really, most likely you're going to lose 1,000 or you're going to lose $1 million. It's kind of your choice, right? Because you didn't really earn the right to trade $1 million. That is the reality. What you guys provide is structure, and you earn the right to trade that bigger account. And if you did your job, like you said, it earned a trade, then that person is put in a position, I think, of strength and of power to actually have the opportunity to be successful.
Absolutely. You worded that beautifully. That's it. Yeah, but yes, that's absolutely correct. Yeah, a mutually advantageous relationship. In short, it's a way for traders to gain more leverage as far as their trading power goes, and it allows them to excel at a much faster rate than was previously possible, while also filling the gap and checking off the box of helping traders decide whether or not trading is even right for them in the first place, because it puts them
Exactly.
in a low risk environment that is still very real. It will introduce them to all of the stressors that come with trading live markets, with being one of us neurotic traders, and figuring out whether, hey, is this right for me, or it's not? Because trading is absolutely not for everybody, but I do believe that anybody could theoretically be a trader. But you know once again, if the shoe fits.
Yeah, we went over a lot of that in our previous show, everybody. You can go back. Chris and I had a great discussion with Maura. In the last show, we talked a lot about processes. We talked a lot about ways to get funded. In this show, we're actually going to be turning the questions around to the users. And what's really cool about what we've been doing, like we said, this was such a success with Earn to Trade and getting so many thousands of people to do this, that what we created was a system where if you ask us questions, or the more that you talked about this upcoming show, the greater probability you have of getting picked. And so we've got a ton of questions. And before I get to those questions, because we're going to get to that next, and right at 12:30 Eastern, which is only 18 minutes away, we're going to be announcing who the winner is. The winners are of the 5 TCP accounts, and so that's really cool. I want to talk about EdgeClear and how they play a role here. I've been working with EdgeClear for some time. They're a fantastic group of people. They've put together one of the best platforms out there. They're working with you guys at Earn to Trade, and there's something unique about it when we talk about live trades versus sim trades. This is your world, Chris. Explain to everybody, when you're using EdgeClear through Earn to Trade, how that is a live situation versus a sim situation like you might see at other desks.
So I think we should start with understanding what a live sim account is, because a lot of evaluation agencies and proprietary trading firms uh, almost at times will mislabel these things. So to understand the definition of what a live sim is before we talk about the live account, which obviously is where EdgeClear picks up the ball and rolls. A live sim account, the orders that you're trading, even though you have the ability after you theoretically pass your evaluation, if you do pass, you're presented with the option of choosing, do you want to start off on a live sim account, or do you want to start off on a live account? So the live sim account, you still have the ability to profit all the same. It's still the same exact mechanisms in your eyes, but those orders, which you don't see, they're not actually going to the CME. It's very popular for in this industry. I'm not going to name any names, for people to label live accounts that are truly live sim accounts, because the orders aren't actually going to the CME. Now, the live account is where EdgeClear comes involved. Now, EdgeClear, futures broker, trading platform, all kind. EdgeClear is a great group of individuals. They are the one that is actually facilitating the pass of that order when you're trading on a live account, actually getting that order from you to the CME. So they're the ones that make actual real trading possible. And there are benefits to starting with a live sim account, because the startup time, because you're not actually creating an account at the CME, or I'm sorry, at the broker, your startup time can be a little bit shorter, and your fees are a one-time fee instead of automatically paying 130 odd dollars a month per exchange, as a professional trader has to pay regardless of where you go. That's not an earn to trade thing. um, but uh, but yeah, EdgeClear makes the live orders possible. They're the guys that are, if you really want to be a trader, you need someone like EdgeClear.
Yeah, thank you so much for explaining that. We're seeing some people saying the giveaway has ended. That's because we already picked the winners and we're announcing them at 12:30. Don't worry, I'm sure we'll work it out with Chris and Earn to Trade, and we will do another one of these. Chris, it's crazy to see how many people. I've done a lot of giveaways. This is by far the most popular thing that we've done. It shows how many people want to get funded right now.
You mean people would like to trade with money that's not their own? Oh no. I couldn't believe it. Couldn't believe it. Yeah, with the
Well,
way the economy is nowadays, I think that it only empowers this industry even more. I mean, the idea of minimizing risk while increasing profits is really a rare thing. If you stop and think about it, there's not really other too many other things in this life where you have such clearly identifiable win-win type scenarios in something that you're looking to achieve. I really but anywho, yeah,
yeah,
it's a cool thing that we've got going in
it's a
such tough
great
times
thing.
that we're all dealing with these days.
Yep. And let's get into the questions because we've got just under 15 minutes before we announce the winners, who they are. Like I said, there will be five of them today. The first one we got was from, I'm going to butcher some of these names, and some of them are from Twitter, and some of them aren't really their real names. So if I get it wrong, I apologize. But the first one's from Lassen Atmani. How can I master my personal psychology to avoid over trading? Now, all of this I know we're going to gear towards getting funded, right? And so, Chris, you understand how everything works with what they have to do to get funded. So let's go to that mindset of passing um, the funding experience.
Absolutely. So passing the funding and experience, regardless of whether if you're coming to us, we have two products that we're generally offering, and that's the TCP, which stands for the Trader Career Path, and then we have the Gauntlet Mini. Both of the rule sets to pass both of these are very similar. So in short, you have to do things like trade a specific number of days, such as 15. That's the current number. It's 15 days. It's really always been 15 days for us, but the idea here is we're looking to make sure that you're not a lottery card trader, that you didn't just throw in one big win, hit a certain profit target, because there is a profit target that you're looking to achieve. That's how you pass, by showing that you're capable of creating a certain ROI per whatever account size that it is that you're choosing, because it is specific to what account it is that you choose. But you're looking to trade a consistent or trade consistently over a minimum of 15 days. You can trade longer if you so choose, but you have to hit these profit targets, and you want to do it incrementally, because one of the rules also is to maintain consistency. And what we mean by that is we don't want 30% or more of all the profits that are generated on your journey to passing one of these evaluations to come from any one trading day. And once again, the reason is we're trying to filter out just random one off type winnings that aren't indicative of somebody that's capable of continuously repeating that success. So, say you have one really big day, it's as simple as trading continual days, however many it might take in your particular example in this hypothetical scenario, until those averages come back down. And they just come back down to where you're under 30% of your total generated profit coming from one individual day. So you don't fail if you go over. So it's not going to rule you out, but it's important to be aware that if you want to pass, you do need to make sure that your profit isn't all coming from just one place, essentially. It's a relatively simple rule. And then we also have um, easy things to adhere to, in my opinion, like the progression ladder. The progression ladder is just another rule where essentially you have a limited number of contracts that you're allowed to open based on where you're at in your stage of your progression. So maybe the progression ladder says, with the account that you have, maybe you can only open 2, 3 contracts. Simply put, don't open 4 contracts. If you open 4 contracts, you're not going to pass. So as long as you're aware of the rules, which are all very clearly illustrated, it's there's nothing hidden in the shadows. They're all very clearly identified, and they're all very easy, in my opinion, to understand why they're there. Not just because we want to make things hard. We actually want you to pass. So we're trying to do everything we can to make sure that you understand these rules intricately, and the tools that you need, or the psychological weapons you need in order to pass. Um, but as far as the rest of the rules go, there's also a daily loss and an end of day drawdown limit, potentially based on which path, once again, that you're going. And those simply just mean the most amount of money that you're capable of losing before your account is cut off. And it's important while I'm on that subject, because some people might be wondering this. In the event that a trader gets funded, they're trading with, their newfound account. Say they have a bad spot, things don't go well, they accidentally lose more than they're allowed to lose in a day, or the end of day drawdown limit, what have you. They are never on the hook for losses, and that's important because a lot of people, I've been getting questions recently where it's become clear to me that a lot of people are thinking that, say you get funded and then you're trading and you sustain a massive loss, like Earn a Trader, the proprietary trading firm, is going to show up on your door and be like, hey, you owe us this money. That's not at all how it works. The worst thing that could ever happen to a funded trader is they simply have the money that's given to them to trade with taken away, but they're never on the hook for any type of fees or anything beyond that point. But yeah, hopefully I covered.
Yeah, no, you
Yeah.
covered a lot in that, and it brings me to what question I think I should follow up with this. And I like this next question from the trading chef. What is your ideal risk per trade on an evaluation?
So a lot of traders like to adhere to the 1% rule, but this is one of those ones that at times it'll seem like it's trending a certain way. We might have a lot of traders that like to trade 1%, and that does them well, meaning they're not exposing on any one particular position more than 1% of their total available trading capital. They're not putting more than 1% of their total capital at risk. But sometimes you'll see trends where it'll go as high as 5, even 10% for a particular position at times. Once again, it's relative to the particular account. You tend to see the higher percentages on the lower accounts. People feel a little bit more patient when they have the larger accounts trading more in adherence to strict money management protocols. But I guess we could split the difference. And my final answer here will be, we'll say 3%, 2 to 3% maximum capital exposure per position. And it'll allow you to continuously chip away at things. And it'll also make it easier when we go back to talking about the progression ladder, or touching back on what I mentioned with the progression ladder, or I'm sorry, not the progression ladder, the consistency requirement. If you're chipping away, it makes it a lot easier to not all of a sudden have one massive win that then causes you to have to trade more days than you might have anticipated trading. So yeah, anywhere between 1 and 5%, 3% we'll say is the average, and adhering to some degree of strict money management is the most important aspect of all of this. The traders that do that, they decide ahead of time, hey, I'm not going to risk more than X percentage per position and then stick to that. Those traders are the ones that we're seeing have the highest degrees of passing, more so than picking a specific trader based on what their exact percentage is. I think it's more likely that a trader who's willing to have a trading plan to actually adhere to money management is going to pass than just the arbitrary percentage itself. But most would tell you 5% or under is going to be a safe. Once again, it's hard to use those types of words because you know anything is possible. But if you're keeping the amounts low, it gives you multiple opportunities to prove that what you're doing is skill based, not luck based.
That's the key. Next question is obviously a personal question. I think it's more strategic. It's not necessarily something pertaining to funding, but we're going to ask it because somebody sent us a tweet. So we're going to ask the question: what yields more tradable signals, market profile or volume profile?
That is 1000% subjective. So if you were asking what yields more trading signals for me, Chris, I do prefer market profile, but there's no right or wrong answer here. I've seen traders that can't generate a single trading signal from either of those options, and they might generate their trading signals based on what shape the moon is today. And it doesn't matter at the end of the day what you're doing, as long as you're consistently capable of replicating that in a statistical way that substantiates that you should be doing that over and over and over again. So I think a lot of people get this predisposition to judge trading strategies before they realize how subjective every single trading strategy actually is. I can give the exact word for word, line by line method of how I trade to another trader, And do you think we'll get the same exact results? Absolutely not. And it
No.
doesn't matter what you're doing. The market is dynamic, which is why you're always going to have a variable in the equation. It's why things are always going to be changing. You're never always going to expect the exact same outcome out of the equation, which is why we have to have a trading plan. It's why we have to have risk management. So I try to stay away from what strategy is better between these two because it's completely relative to the trader that's using it.
Yeah, no, it was a great way to answer that question. That was from Gene Gerwin. Gene, thank you for that question. Next question we're going to get to is, well, once again, this is kind of a pretty big question. Some of them are pretty big questions, and I know that we may not be able to answer them perfectly for you in here. But this question is, what are the golden rules to being a profitable trader? Uh, hey, I'm glad you're taking this one, Chris.
So the golden rules. Everyone wants the golden goose that drops
Let
out the
me
golden eggs.
yeah, well, let me talk about this because we're talking so much about funding and today, and obviously we're getting into the winners here in just a moment. Let's give the perspective once again of the person trying to get funded. What are a set of rules that you would have in your mind, Chris, going into getting funded? You got these 5 winners coming up. What is the mindset for them going into getting funded? What are some rules they should follow?
The most important one, just by far and away, is slow and steady, which I was already alluding to or hitting on. And that's taking small trades. A larger number of small trades statistically has a higher, is more correlated to traders passing than traders that are taking a lesser number of larger trades. So small and steady is a provable statistic that correlates to traders being more likely to pass. But it also affords you the opportunity to try more than once or more than twice or more than 5 times or what have you, because your trades are smaller, your capital is moving slower. And the benefits of that exist outside of just the end of day or daily loss limit risk of if you're taking bigger trades, your volatility is going to cause you to swing a little bit closer to the failure line, we'll call it. But outside of that, you also have the psychological advantages of when you're taking smaller trades. Most of us are not, as much as our significant others like to tell us, we're not psychopaths, and it's a lot less of a psychological burden to know that the amount of money that you're trading is percentage wise very small in relation to the entire account size, regardless of what those numbers may be. And that translates generally into a trader achieving and succeeding at a higher rate when they have less of that psychological monkey lifted off their back. So slow and steady, massive, massive, massive correlation to traders actually doing well. Adhering to all of the rules, it's the most simple answer. But when you're operating or looking to pass, improve, and earn a trading account, the rules are quite literally the most important thing, and everything else is going to come second to that, because the rules are going to dictate whether or not, and the goals, obviously the profit goals, are going to dictate whether or not you pass in the first place. And all of the rules are rules that if you were to go on any trading forum, I don't care, I'm not going to name drop anybody, but if you were to go into any trading community and look up what are good psychological principles that a trader should exhibit in order to have the highest chance of passing, almost all of the rules that exist in are essentially already written there in one word or another. They're All of the rules to pass are rules that most traders should, in my opinion, be employing anyway, with or without our accounts, with or without trying to pass, because all of the rules themselves are good psychological principles or instill good psychological principles that will increase your chances of success. So slow and steady, adhere to the rules. Another really big one is making sure that you're staying aware of your mental disposition as you're going forward trading. If you're trading and you sustain a loss, uh, that loss is going to weigh on you. Now, to what degree is going to be a very subjective question that you're going to have to figure out. And hopefully, that's where the demo account comes in before you get to the stages that we're talking about. But it's important to be aware of when to call it quits. It's important to be aware of, and when I say quits, I don't mean forever. I mean you step away for the day, go take the dog for a walk, go have lunch with the wife, do it, whatever it is that you have to do, but get away and don't keep force trading. The majority of traders that we're seeing fail are traders that at times or for a while were doing just fine, and then they have one really bad day. And that's all it takes. We all know that in the trading world. You can wipe an account in a day if you're trading improperly or you let your emotions get the best of you. I've done it before. All of us have done it before. It's part of earning your stripes on your way to your black belt. It's one of the things that a lot of traders, even though it's so glaringly obvious that if I'm mad, maybe I'm not making sound trading decisions. Yet for some reason, I see a large number of traders not actually listen to that inner voice that's telling them, "Hey, you might be a little emotionally compromised. Maybe you should walk away." Instead, it's very common for traders to succumb to that that lustful voice that says, "Oh, I can, if I just get one more trade in, just one more, I'll recoup all the losses that I had." And that mindset is horribly damaging for traders. Kick that out the door and don't ever invite it back. You'll be better off, I promise you.
I love that, Chris, and for all of you getting a chance to trade with Earn to Trade with one of the 5 winners, which is we have 5 winners coming up here in just a few moments. I want to get to a couple more questions. We're going to be we're going to be putting the winners out here in just a few minutes. And so, Chris, what I want to do is I want to hit a few more questions because we did get so many of them. I want to get to them before we announce these winners. And this next question, I think, is really good because right away when people are going to get these accounts, people are going to come in and they're going to want to start to trade right away, right? They're going to go in, they're going to get that account. I love this question. What is the most important thing to concentrate before engaging in a trade? It's that first thought.
Ooh, that's going to take some thought so I don't blurt out something silly. The most important thing that comes first before engaging in a single trade. That's the question, right?
Yeah.
Okay.
I could warm you up for a minute. And here's what my thought is when I was reading this, and I've had
Yeah,
more
yeah.
time to think about it than you, is for me just knowing where I'm wrong before I'm getting in. Because in my mind, I'm already healing, knowing that I've basically paid for that trade. I've accepted that loss. So mentally, I go into that trade saying, look, if I want to buy here at the S&P at 42.80, if I'm wrong at 42.75, in my mind, that's the most important thing to me because once it gets to 42.75, I am out of that trade. And if you've already thought about that before you got in, the healing process already begins. And now you just start focusing on the market.
I like the way you worded that, calling it the healing process. It's similar to what my answer was going to be, in the sense that I think the most important thing is to have a plan. The most important thing is to actually know where your entry is going to be and why it's going to be there. And if you can't answer that, you shouldn't be there. And it's to know where your exit's going to be, whether things go right or whether things go wrong. So you have to have 3 things that you should always be able to answer. So I'd like to take that. What is the one thing that should go through your head and kind of like just branch it off into 3 things? And that's know why you're going to get in if you do get in, and know why you're going to get out if things are going well, and know like where that location is, and to know where you're going to get out should things go bad. Where is
He bounced for a second here, Chris. We'll wait for him to get back in. And I love where he was going with this. Unfortunately, we lost his connection. And here we are. You're back, Chris. Unmute yourself. You're still muted. I can't unmute you. You can mute yourself if you see there. There you go.
okay, perfect.
You're
uh
back.
yeah, we didn't, I'm sorry everybody, we didn't talk too much about it, but we're dealing with a massive amount of water in my internet line, as well as the power to the house is very, very spotty these days, so I apologize everyone. But anyway, those 3 things are really just knowing why you're getting into a trade, um, where you're going to be getting out of the trade when it goes well, and where you're going to be out of the trade when it goes wrong. If you have all of that set in stone before you execute, chances are that whole process is going to go a lot smoother for you, because you can detract that emotional aspect from it. You want as little being done for emotional reasons as absolutely possible. You want, even though I said we're not psychopaths, you want to emulate one. You want to emulate one, but in the best of ways. I'm not saying to get rid of your neighbor because they knocked your trash can over, but I'm saying make sure that you are thinking like a computer. You're thinking algorithmically, and you're going to know these things before you go in. Nothing we do in trading should be a spur of the moment random decision, as much as we all get those gut intuitions where we're like, oh, I know it's going to pop. I know we're about to run. I know it is. We just broke through the volume heavy. This isn't according to my trading plan, but I know it's going to happen. So here we don't do that. I did it,
Yeah.
so you don't have to. Please listen to me. Don't do that.
My favorite things about getting the new world of getting funded, it's not really that new, but it's new and for a lot of people, is you come in with structure, you come in and you are forced to follow a set of rules versus you opening up your own account and you not having somebody behind you looking at you saying, look, this is what you should be doing. It provides structure. And I think that's my favorite thing about people going to get funded. And whether you get funded or you don't get funded, I think it's a great place to start because you are going into a set of rules that you have to follow and you are developing structure. Your strategy does not matter. What they're laying out there for you is how you become a trader, right? The strategy itself isn't the most important thing, as you've heard Chris and I discuss. It's about you going in and actually executing with risk management and look what we talked about, risk per trade, all these different things. And that's my favorite thing about people coming in and getting funded. We're here ready to the countdown. I'm going to go to the chat now because a lot of people sent us questions. We've got hundreds of messages in chat. And I want to have you maybe answer a couple of these real quick, and then we're going to pull up the winners here, Chris. This is an interesting one. This is really directly to you guys. Earn to Trade has in the past paid their funded traders as capital gains rather than the ordinary income paid by many other firms. Do you still pay in capital gains?
I think what they're referring to is to how things are categorized on taxes, and generally trading income is. And I actually feel real uncomfortable answering tax related questions. I don't know if that's a great idea, but maybe the simple answer to that question will just simply say yes, but I don't understand how they're saying many other firms are not paying in such a way. This question actually eludes me a little bit, but nothing has
Yeah.
changed on our. Hopefully this answers your question. Nothing has changed on how we do things. So there you
Yeah.
go.
Yep. And a lot of it, obviously, you guys can go to Earn to Trade's websites for some technical questions that you have for this. And then this is just a question is, can you operate without indicators? And I think, yeah, right. I mean,
Absolutely. The majority of my trading mentoring career has been trying to illustrate just how indicators in most cases of traders that I've seen on their path to actually becoming successful, the ones that actually do become successful, so many of them were over indicatoring. So many of them were not actually learning how price action works. So many of them were just simply looking for, they were so far removed. Remember, an indicator is nothing more than a visual representation of data, whatever data it is that you're trying to extrapolate from the market. It's a visual representation that's supposed to make it easier for your brain to understand what's going on. The problem with that is if you start getting too heavy into indicators, you start not really understanding how the markets work. You're not really understanding the language anymore. You're not really understanding why things are happening. And you start to miss a lot of really obvious price action moves that could have saved you from some potential false signals. All indicators produce false signals. What does not produce false signals is taking the time to actually analyze what's going on from multiple angles. And when I say that, I just put a caveat on that. Of course, every single trade could possibly be wrong. I'm not saying that there's a 100% way to succeed, but the highest chance at succeeding is not going to be blindly following an indicator. It's going to be understanding what the market's doing and using that in tandem with whatever indicator read that you're getting.
Yeah. And I want to get to these next two questions here because these are the last two we're going to take. What do you think about time slots?
In reference,
I
I,
don't, I
I
don't, I was reading it and I'm like, maybe this is something I don't know. Maybe just the time slots of when to trade. Is
Okay,
earn to
'cause
trade? Let me ask you this: is earn to trade 24 hours a day whenever the markets are open? There's trading, or is there specific times that
so
you
there
can't?
are specific times, but it is primarily open, and the times simply are just when the exchange of the asset that you're trading is open. So it is very important to be aware of that. It is because that is one of the rules. You will only have positions open, and this includes both open and closed equity, while the exchange of the asset that you're trading is open. So whatever you're interested in trading, you should be aware of the exchange of which that asset is traded, and only trade while the exchange is open. Positions must be flat if those exchanges of that asset are closed.
Yeah, I'm glad we asked that. That's an important part of it. From Nicholas, is it always necessary to take into account fundamental and technical analysis to operate? Of course not, Nicholas, but I'll let Chris answer it.
No, of course not. Yeah, I like that. Yeah, of course not. I mean, I could, put a cinder block on my gas pedal in my car and drive myself straight into a highway overpass, or I could in I could go through all the information that's available to me and increase my chances to the highest possible degree of actually succeeding. I think that incorporating fundamental analysis with technical analysis is crucial as a trader because it allows you to get the bigger picture with the smaller picture. And I'm a huge component. This kind of almost inadvertently touches on the time slot question if this is the other angle that he was meaning. I'm a I should say, proponent, sorry, not component. I'm a big proponent for making sure that we're aware of the larger time view and then working our way backwards and putting the puzzle together. It's important to be aware of the macro trends before you execute on the micro level, if that's what you're doing. And I think most of the people visiting right now are probably aspiring day traders. So it's going to be very important for most of you to understand the importance of taking a picture that's farther out, a more bird's eye view, and then work your way in and then wait for that moment to strike. And that moment to strike should always be in agreement with what's happening on the bigger scale. So yeah. Incorporate all that you can without it becoming a detriment.
Nicholas, yeah, and I didn't mean to jump on that right away. I wanted to say, as I know a lot of you guys are new, and I think this is actually a really great question of Nicholas, because I think people come into it and they think, do I have to know, let's just say you're trading oil, do I have to know what's happening in the macro side of oil? Do I have to know what's happening right now with the Fed? And here what I would say is the first 15 plus years of my career, I didn't really look at much macro at all. The last 10 years, I've looked at it a lot. And I remember a trader telling me this one time, and I'll never forget it. He goes, technicals help me get in trades. Macro helps me stay in trades. And when the macro analysis is combined with the technical analysis, that's when you a lot of times get the biggest moves and the strongest moves. So Nicholas, it's one of those things where I don't think you needed to be successful. I was very successful without it, and now I'm successful with it. And so I think it's just a matter of preference, but just think about that because that was a tip that someone gave to me, and it really helped me. All right, let's announce these winners. We have 5 winners, and Chris, we're going to be pulling these winners up. Thank you so much for everyone that's participated. Well, like I said, what's crazy is, and here are the 5 winners. I'm going to announce them here right now. Nearly 4,000 people, and 2 times we've done this, have come to get these 5 TCP
That's awesome.
giveaways. It's just crazy. I think about it and I'm like, man, that's just really awesome. And like I said, good on you guys, and great for these winners. And hopefully I get your names right. It's Salahuddin, Jose Isaiah, Juan Pablo, Makluf, Milud. If I got those right, I mean, Chris, that could be, I don't know. I
I'm
think it sounded good.
Don't you even ask me to try to help. I'm not
To
doing it.
you 5, congratulations. I'm so happy for you guys. Hopefully you took away a lot of what we discussed today to help you in your journey as a trader. Like I said, this has been a great relationship with Earn to Trade and Edge Clear, giving 5 people an opportunity to go in and get funded. And go back and listen to this video and listen to what Chris had talked about that mindset before you go in and begin. We will be letting Earn to Trade will know who all these winners are. They will be contacting you. And if for some reason you don't get contacted, please reach out to us, through our website, and we'll make sure that you guys get get your giveaway. Now, Chris, explain to everybody what it is that they won.
So first off and foremost, congratulations, everybody. It's a very exciting thing to win. But so in short, you're winning your shot at proving that you have what it takes to receive trading capital. That's what you're winning. Our flagship product is called the TCP, and the TCP we briefly mentioned, I believe, stands for Trader Career Path. Essentially, what it is you're winning an evaluation that allows you to, if you pass said evaluation, you will continue to be given larger and larger trading capital accounts to trade with as you just do what you would be doing normally and just continuously withdrawing profits. Regularly, as you hit profit targets, your account automatically is going to upgrade. It's really, really cool the way this works. Most of the things in the industry, as far as I'm aware, I don't know of another program in the industry that functions in the way that the TCP does. Just it's kind of very unique in the fact that it actually provides a low cost way to access very high levels of trading capital. And it's really almost never ending, because as you progress along your journey, when you pass, have the right mindset. When you pass, you're going to continue to replicate those successes, of course, because I would have done a bad job of letting you pass if it was all luck, right? So you're going to continue to replicate those successes. Your account's going to continue to grow. The simple steps that come along the way with the TCP 25 and TCP 50, they both start. The 25 starts at $25,000. That's your evaluation account. It's evaluation capital. It's not real money that's actually going into the exchange. That's where you're having to achieve your profit goals and all that good stuff. But as soon as you come along and you reach with 25, it's $1,750 when you withdraw. After you've passed, your account's going to automatically upgrade. You're going to go into the $50,000 account, and then from so on and so forth, you're going to continuously, there it's $3,000 if I'm not mistaken. You're going to continuously upgrade, and it basically goes 25,000, 50,000, 100,000, 200,000. And then with the TCP 50, it starts at 50,000. So it goes 50,000, 100,000, 200,000, and then 400,000, which is the max account. And the reason I'm doing the bunny ears here is because it's not truly the max ceiling still, because if you actually make it all the way to the end, which you should be capable of doing if you're making it to the first step, right? Same process the whole way through. You will be provided with, should you make it there, a custom offer. So that we'll keep as just I'll just leave that as a little tidbit of an ethereal type of a little.
That's cool.
Yeah, just keep it at the end. Even at $400,000, it is possible that you end up higher than that, but let's get there first.
That's right. I think we end on that note, Chris. Thank you so much to Chris for joining us underwater, all the technical things that could have gone wrong. We made it through it, Chris. I appreciate you so much. Your content's fantastic. Everybody follow Earn to Trade. And if you didn't win today, I'm sure that we're going to talk with Earn to Trade and the great people at EdgeClear again about doing this again, maybe in a couple of months. So make sure you stay tuned by going to anthonycrudele.com and you stay on our email list. So when we do this, you will get notified. If you guys enjoyed it, hit the like button. Please share with everybody else out there. Chris, thank you so much. Everybody that tuned in and commented, you guys are the best. I will see you guys next time.
Thank you, everybody.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a 5-star review on iTunes. Never miss an episode. Go to anthonycrudele.com and get on our email list for show notifications and for free content that is exclusively for subscribers. Also on anthonycrudele.com, you will find tons of videos and education on trading futures, options, and crypto. Past performance is not indicative of future results. Opinions expressed are solely my own and my guests, and they do not express the views or opinions of my sponsors. Futures Radio Show is produced by Crudele Productions.